Did you know that right now, in this exact second, an invisible thief is reaching straight into your bank account and aggressively stealing your future? I am not talking about a hacker, and I am certainly not talking about a petty criminal. I am talking about the institution you trust the most to keep you safe. I am talking about your own bank and the global financial system. Are you struggling to understand why, even though you are saving money every month, working brutal overtime, and sacrificing the luxuries you want, it feels like everything just keeps getting more expensive? Do you ever look at your bank balance and wonder why your money doesn't go nearly as far as it did 3 years ago? If you feel like you are running on a giant financial treadmill where, no matter how fast you sprint, you are never actually moving forward, you are in exactly the right place. In this video, I am going to break down the exact mathematical reality of how the modern financial system is legally making you poorer every single day. And if you stick with me until the very end, I will reveal the exact 3-step strategy the top 1% use to completely hack this inflation matrix, multiplying their wealth effortlessly while the rest of the world sinks. To truly understand this trap, we have to do something the traditional education system strictly forbids us from doing. We have to think for ourselves, question the foundations of our society, and travel back in time. Since you were a young child, you had specific mental software installed by your parents and teachers. They told you to study hard, secure a safe corporate job, spend less than you earn, and above all else, save your money in the bank. We were aggressively sold the idea that saving currency is the guaranteed path to security and financial freedom. And the absolute most tragic part is that for our grandparents, this formula actually worked beautifully. I want you to imagine your grandfather back in the 1970s. He could walk into his local community bank, deposit his hard-earned savings from a week of manual labor, and the bank manager would gladly pay him 8, 10, or sometimes 12% annual interest on his cash. Saving was an undeniably great deal back then. The money sitting idle in the bank vault was actually growing significantly faster than the prices of consumer goods were rising at the grocery store. You were getting richer just by sitting on your hands. But here is the brutal truth no one warned you about. The rules of the game changed drastically. The entire financial board was shattered, and nobody bothered to send you the memo. Today, you pull out your smartphone, open your sleek banking application, look at your so-called premium high-yield savings account, and the bank generously offers you an insulting 1 or 2% annual yield if you are lucky. And they sell this to you in multi-million-dollar television commercials as if they are doing you the biggest financial favor of your life. But this is exactly where the financial matrix blinds you. Let us uncover the first massive fraud of the system, inflation and the destruction of purchasing power. Imagine that you played by all their rules. You were the perfect, obedient citizen. You worked a stressful job for 10 straight years. You didn't go out partying. You didn't finance that sports car you really wanted. You lived well below your means, and after a decade of severe discipline, you managed to save exactly $50,000. You are incredibly proud of yourself, and you should be. You put that $50,000 into your bank savings account, lock your phone, and go to sleep feeling financially secure. While you sleep, the bank metaphorically pats you on the back and pays you that 2% interest. That is $1,000 over the course of an entire year. It sounds okay on the surface, right? You now have $51,000. You see the number go up on the screen, and your brain releases a little hit of dopamine. But simultaneously, behind the scenes, the cost of the real physical world around you is skyrocketing. The price of quality meat, the cost of your monthly rent, the price of gasoline to get to work, electricity bills, and the cost of sending your children to school. All of these things are rising at a real undocumented rate of 7, 8, or sometimes well over 10% depending on where you live. Let us do some elementary school math, because this is the exact math they intentionally kept out of your high school curriculum. If your money is growing at an agonizingly slow 2%, But the cost of keeping yourself alive and housed is growing at 8%. Congratulations. You have just lost 6% of your true purchasing power in just 12 months. I need you to understand a critical distinction here. You did not lose the nominal number on the screen. Your banking app will still proudly display that you have more dollars than you did last year. The illusion is maintained perfectly. But what really matters in this world, the physical amount of goods, services, calories, and square footage you can acquire with those paper bills, has completely evaporated. You have lost your financial firepower. Let me ask you a quick question, and I want you to be completely honest. Have you noticed this exact phenomenon at your local grocery store lately? I want you to seriously think back and remember exactly how much it cost you to fill your shopping cart with good, healthy food 5 years ago, and compare it to the absolute shock you feel at the checkout counter today. Leave your answer down in the comments below right now, because the difference is absolutely brutal, and I want to know if you are feeling this squeeze just as intensely as I am. This devastating loss of your purchasing power is not a temporary glitch in the economic system. It is not an innocent accident that well-meaning politicians are desperately trying to fix. It is the exact, deliberate, and calculated design of the system. Inflation is nothing more than a hidden tax. It is the most regressive, cowardly, and cruel tax that exists in human civilization, because it does not require Congress to openly debate it. It does not require any politician to pass a public law. It does not require you to vote for it at a ballot box. And most importantly, it directly and viciously attacks the working and middle class who traditionally keep their hard-earned wealth in cash. Meanwhile, it acts as a massive, silent subsidy for the financial elites who hold all of their wealth in hard assets. But to truly understand why this happens and how we got into this mess, we have to go straight to the root of the problem. We have to talk about the year 1971. I need you to stick with me here, because understanding what happened in this specific year will forever change how you look at every single paper bill in your wallet and every digit in your bank account. Before the year 1971, money actually made logical sense. The United States dollar was tied directly to physical gold. Under the Bretton Woods system, for every paper bill in circulation, there was supposed to be a corresponding physical amount of gold securely locked inside a fortified vault. This meant that the government and the central bank couldn't magically print infinite amounts of currency to fund their endless overseas wars, their massive welfare programs, or their desperate political promises. They were heavily constrained by physical reality, because they didn't have infinite gold. Money was hard. It was scarce. It required actual human labor to produce, and it was undeniably real. But on August 15th, 1971, President Richard Nixon went on national television and announced that he was temporarily suspending the convertibility of the United States dollar into gold. Spoiler alert for anyone paying attention. That temporary measure has now lasted for more than half a century. In that precise historic instant, money fundamentally stopped being real money. It was transformed into what we call fiat currency. Fiat is a Latin word that literally translates to by decree. I want that to sink in. Our money today has value solely and exclusively because a group of politicians in suits say it does, and because we, the public, blindly trust the collective illusion. What actually happens when you completely remove the gold backing from a currency? You hand governments and unelected central bankers the keys to an infinite money printer, and when you decide to print trillions upon trillions of new dollars, euros, pounds, or pesos out of thin air, with the simple push of a digital button, you instantly dilute the value of all the existing money that you already had in your pocket. It is the most basic principle of supply and demand. If tomorrow we could, magically wave a wand and double the amount of sand on planet Earth, the price of sand would plummet. If we double the amount of paper bills in the economy, your life savings lose their value. It really is that simple. And if you think that losing that 5 or 6% a year to silent inflation is your biggest financial problem, you need to hold on tight, because what your friendly neighborhood bank actually does with your money, once you walk through their sliding glass doors, is nothing short of criminal genius. I am going to explain their exact business model to you right now, And I guarantee that by the time I am finished, you are going to want to pull every single cent of your money out of their system today. Welcome to the incredibly lucrative, highly guarded concept of fractional reserve banking. When you, acting like the good, responsible citizen society trained you to be, deposit those $50,000 into the bank, you probably have a comforting mental image in your head. You probably imagine the friendly bank manager taking your stack of bills, walking into a giant steel vault, placing it in a safe deposit box with your name carefully written on it, and guarding it day and night, waiting for you to come back and withdraw it. This is completely, unequivocally false. Your bank is not a safe deposit box. Your bank is a highly leveraged casino where the house never, ever loses. Under the fractional reserve banking system, the law actually allows the banking institution to take your hard-earned $50,000, keep a minuscule, almost laughable fraction of it on hand, let's say 10%, which is just $5,000, just in case you or a few other customers come in asking for cash to buy groceries. So what happens to the remaining 90%? What happens to your $45,000? They lend it out to other people to make a massive profit for themselves. They take your $45,000 and they lend it to a young, naive guy who desperately wants to buy a brand new, depreciating sports car at a 9% interest rate. They lend another chunk of it to a newlywed couple looking for a 30-year mortgage, which, by the way, is that exact same devastating housing trap we completely dismantled in my previous video, so make sure you watch that if you haven't already. They lend that mortgage out at a 7% interest rate. And the most predatory part? They lend the rest of your money to desperate people living paycheck to paycheck through high-limit credit cards at 22, 25, or even 29% annual interest. I need you to process what is happening here. The bank is using your money. They are assuming virtually zero operational risk with their own proprietary capital. They take the direct result of your blood, sweat, and tears. They multiply it out into the economy. They charge an average of 12 to 15% blended interest from all of these different borrowers, and then they turn around and throw you, the original owner of the capital, some pathetic crumbs amounting to 1 or 2%. They pocket that massive double-digit profit margin entirely for themselves, simply for playing the role of the middleman. Do you finally realize the profound irony and the sickening hypocrisy of this financial system? The banking executives use your deposited money to aggressively invest, to lend, to generate massive cash flow, and to create real, tangible wealth for their shareholders. Behind closed doors, they act as the most aggressive, ruthless investors on the planet. But to you, the consumer, through billion-dollar marketing campaigns and traditional financial education taught in public schools, they convince you and force you to act as a passive, docile saver. They literally do exactly the opposite of what they tell you to do. This is exactly where the famous concept of compound interest comes into play, but it is weaponized against you, not working in your favor. When banks calculate the profits they are going to make on lending your money, they use aggressive mathematical compounding formulas that they conveniently never explain to you when you are sitting at the desk opening your checking account. They maximize the compounding frequency on the debts they issue to collect as much as humanly possible, but they pay you the lowest, slowest possible compounding rate on your deposits. It is a calculated mathematical asymmetry specifically designed to drain your net worth and transfer it to their balance sheet. Let me tell you a story to make this crystal clear. I know a guy. Let's call him Carlos. Carlos was raised with the absolute strictest old-school financial mentality. From the year 2010 onwards, Carlos saved religiously. He squeezed every single extra penny out of his paycheck. He never took international vacations. He drove a 15-year-old beaten-up sedan. He ate rice and beans at home while his friends were out at expensive restaurants. By the year 2020, Carlos had achieved his ultimate life goal. He had saved exactly $100,000 in pure cash. He felt like a financial king. He was finally ready to buy a nice piece of property debt-free and start building his family. But during that exact same 10-year decade, the central banks and governments of the world panicked over various economic crises. To solve their problems, they turned on the printers and created more new fiat money than in the entire previous history of humanity combined. They flooded the global markets with fake liquidity. When you have trillions upon trillions of brand new, freshly printed dollars aggressively chasing the exact same limited, scarce supply of real estate, what do you logically think happens to the price of those houses? They shoot straight to the moon. The modest house that Carlos wanted to buy back in 2010 cost exactly $100,000. In 2020, that exact same house, sitting on the exact same dirt, without a single modern upgrade, without a single new brick being laid, was now priced at $280,000. His $100,000 in cash, which cost him an entire decade of extreme sacrifice and delayed gratification, was now only good enough to be used as a simple down payment, permanently shackling him to a lifetime of 30-year mortgage debt to the very same bank that held his savings. His ultimate reward for being the perfect disciplined saver was losing more than half of his real purchasing power in the housing market. That, my friends, is the inflation matrix in its purest form. It actively punishes you for saving. It brutally penalizes discipline, and it infinitely rewards the system for devaluing the currency. If you are listening to this right now and you are not at least a little bit furious about how this game is rigged against you, then you simply are not paying close enough attention. But I promise you, I am not just here to show you the heavy chains around your ankles. I am here to show you exactly where they hid the key, and I am going to show you the exit door. Remember at the very beginning of this video when I promised to reveal exactly what the top 1% does to protect themselves from this silent daily robbery? The time has finally come to deliver on that promise. The truly generationally wealthy people understand one fundamental, unbreakable rule of the universe. Cash is absolute trash. Cash is nothing more than a melting ice cube sitting in the middle of the Sahara Desert. The wealthy do not save paper bills. The wealthy ruthlessly and systematically accumulate assets. What is an asset? An asset is something whose value is intrinsically tied to physical reality, to human utility, or to actual economic production. It is not tied to the empty promises of a corrupt politician, or the printing press of a central banker. When the government panics and inevitably prints more money to cover their massive deficits, the value of their paper money drops like a stone. By simple, undeniable mathematical logic, that means you now need more of those newly devalued paper bills to buy the exact same physical house, the exact same share of a highly profitable company, or the exact same ounce of precious gold. Therefore, the nominal paper price of assets goes up in tandem with inflation. Inflation doesn't hurt the people who own the assets. It acts as a rocket engine that propels their net worth upward while everyone else is drowning. Think about it this way. To make it perfectly clear, if you have $10,000 parked in a traditional bank account and the real inflation rate in the economy is 10%, your financial ship is taking on water fast. You are sinking. But what if you take those exact same $10,000 and you invest them by buying a piece of the S&P 500 index? This means you instantly become a fractional owner of the 500 largest, most powerful, and most profitable corporations in the United States. We are talking about companies like Apple, Microsoft, Amazon, and Google. If inflation goes up 10%, what do you think those massive corporations do? Those companies do not just sit there and absorb the loss. They have immense pricing power. They immediately raise the price of their new smartphones. They increase the monthly subscription fees for their software. They charge more for their cloud computing services and their logistics. Because they charge more, their top-line revenues go up, their bottom-line profits go up, and as a direct result, the value of your shares goes up to accurately reflect that massive new amount of money sloshing around in the economy. You are financially protected. You have placed yourself in a sturdy boat that effortlessly floats and rises with the inflationary tide instead of being tied to a heavy rock at the bottom of the ocean, slowly drowning in the devaluation of fiat currency. And this principle is absolutely not just limited to the stock market. It applies to commercial real estate. It applies to income-producing farmland. It applies to industrial commodities. It applies to owning your own private business. And even, for the more modern, forward-thinking investor, It applies to the absolute, mathematically verifiable scarcity offered by Bitcoin. Any financial vehicle that fundamentally cannot be reproduced infinitely and effortlessly by a bureaucrat sitting at a desk in Washington, D.C., is your ultimate safe haven against the silent theft of inflation. So, get a pen and paper, because here is your actionable escape plan starting this very second. This is the exact blueprint to unplug yourself from the matrix. Rule number 1. You must immediately stop worshiping cash as an investment. Money sitting in the bank serves only one legitimate purpose in your life. As a strictly defined emergency fund, I want you to calculate your absolute bare minimum survival expenses for 3 to 6 months. Rent, food, utilities, insurance. Keep that specific amount in cash. Period. Consider the inevitable loss of value to inflation on that specific pile of money as the necessary premium you pay for a peace of mind insurance policy. It guarantees you won't go homeless if you lose your job. But understand clearly, it is not an investment. It is merely a temporary, depreciating shield. Rule number 2. Every single extra dollar, peso, pound, or euro you earn above and beyond that strict emergency fund must be deployed immediately to the financial battlefield. You have to start viewing your money as a massive army of relentless little soldiers. If you leave them sleeping in the bank's barracks, they will grow weak. They will lose their value, and they will eventually starve to death. You have to aggressively send them out to work hard for you every single day. Send them to capture new economic territory, to buy pieces of profitable businesses, to generate quarterly dividends, to acquire tangible, scarce assets that the government cannot print. And right before we finish today, because I promise to deliver the absolute maximum possible value for those of you dedicated enough to stay until the very end, I am going to give you the ultimate final secret. This is the definitive pro tip that completely separates the millionaires from the billionaires. This is the concept that will bend your mind. Inflation ruthlessly and mercilessly destroys passive savers, but it massively, exponentially benefits smart, calculated debtors. I know that sounds completely crazy. Since childhood, we were taught that all debt is inherently evil and bad. But you have to understand the difference between consumer debt and productive debt. If you are smart enough to take on long-term, fixed-rate debt at, say, 5% interest, and you use that borrowed money to buy a productive, cash-flowing asset like a multifamily rental property, and then the real inflation in the broader economy shoots up to 8 or 9%, guess what magically happens? The fiat money you are using to pay back that debt every single month is actually worth significantly less in purchasing power than the money you originally borrowed years ago. The government, through their reckless money printing and inflation itself, are literally paying off your debt for you in real terms, while the physical asset you bought simultaneously appreciates in nominal value and the rental income you collect increases. This is exactly, step by step, how the financial elites build multi-generational empires without using a single cent of their own liquid capital. They short the currency by holding fixed debt against appreciating assets. But be extremely careful and listen to me clearly. This strategy is strictly and only for productive debt that buys cash-flowing assets. It is absolutely not an excuse for you to go max out your credit card at 25% interest to buy an 80-inch television or designer clothes you cannot afford. Let us summarize this before you go out and take action. The entire global banking system is meticulously designed to extract your capital, enrich the financial class, and let the silent thief of inflation devour the results of your hard work. The only possible way to win this completely rigged game is to firmly decide to stop playing by the loser's rules. Stop being a passive, hopeful saver, praying for a financial miracle that will never come, and immediately transform yourself into an active, aggressive investor who accumulates real, scarce assets. If this information finally opened your eyes, if you feel like I just violently unplugged you from the financial matrix, then I need you to destroy that like button and subscribe to the channel right now. You absolutely cannot afford to miss the high-level strategies we have coming next. And speaking of winning the game using the exact same rules as the ultra-rich, If you want to deeply understand how to actually use debt in your favor and completely avoid the most catastrophic, life-destroying mistake that 99% of normal people make with consumer credit, you have to watch this video right here on the screen. In it, I break down the ultimate credit card trap and show you exactly how to flip the script so the massive banks end up paying you instead. Click that video right now. Your future self will eternally thank you. I will see you over there on the other side.